We're bring in a guest here that I think has been listening to everything. Dana Peterson is the Conference Board's chief economist. Where do you come down on, I don't know, pick your poison, Dana, on those two gentlemen. They agree on some things, but not on everything.
Well, I think it's a little bit of everything in terms of the outlook for the economy and concerns about Fed independence and interest rates. But, just talking about today, I think the Fed will just go ahead and cut interest rates, but there will be a lot of dissension. There will be those who will say 25 basis point cut is not enough. And then there will be those who say, well, look at inflation. It's still above the 2% target. And shouldn't we be more concerned about this, especially since we're not really seeing strong or intense declines in the labor market? In fact, I think the labor market is still doing okay. So,
Dana, you heard, I don't know if you were there for the beginning of Rick's conversation. Do you think that there's a lot of angst, or that the bond vigilantes are all suited up and ready to go if they see something that confirms their worst fears?
I mean, there could be, and I think anything's possible, but I wouldn't say that they're wrong. I mean, certainly there are a lot of concerns about Fed independence. What is the trajectory of interest rates? Right now, we're in the dark when it comes to data, and we don't even know when some of the data are going to be coming out. And so it's very difficult to get a handle on where the economy is right now and where it's going. And so I think, lots of people are just hedging their bets and saying, well, worst case scenario, we get another inflationary story next year because there's so much dissension on the Fed.
I mean, we have people, honestly, we had Loretta Mester on yesterday, said she wouldn't cut today. She wouldn't have cut last time. I don't even think she would have cut the time before that. We've got other people like Myron says we should be a full point lower. How can these opinions be so divergent?
Well, I think because everyone has their own view of the economy, and certainly when you don't have clear data, government data, you're just kind of acting in the dark. I could argue both ways. What I think the Fed will do is different from what I think they should do. So arguably, you could say, well, the labor market's doing okay. The last reading on inflation, which was September, was coming down. And you could say, well, leave rates where they are. But you could also say, well, we do know that higher inflation is coming as these tariffs flow through to the consumer, and businesses are still on the sidelines. And once they start seeing any demand destruction, they may start cutting labor. And so you have these two risks out there. And I think the Fed, now it's being more preemptive, that they'd rather err to the downside, meaning that they think the economy is going to slow. And so they should act now and be preemptive after, more than a decade of being data dependent.
What right now is in the economy makes people wary that inflation could continue to tick higher, or could actually start ticking higher, because it's been kind of flat? I mean, oil prices are down. It just seems like, the built-in reasons to worry about it. Is it wage increases? Where is the real concern that we're in for a period of permanently higher inflation? Because of what?
Structural factors, and you mentioned it right there, wages. Why are wages still sticky? The average wage growth was about 1.5% before the pandemic, and now it's more like 2 to 3%. And that's because we have people retiring. All the baby boomers are leaving their jobs, and they're taking their experience with them. Not all of